CDs are a safe place to stash your money, and they offer a guaranteed rate of return. In today's falling interest rate environment, now might be a good time to open up a CD. The Federal Reserve cut interest rates a few times in 2024. Experts expect the Fed to continue to cut rates in 2025, though probably at a slower rate. That means that opening a CD and locking in today's higher interest rates can be a smart move. But before opening an account, consider your goals for the money you're placing in the CD, including when you'll want access to the funds. Using a CD to save for retirement is not a great idea since you may not need the money for decades, says Chris Reddick, CFP, and owner of Texas-based Chris Reddick Financial Planning. But if you want to buy a new car or other big purchase in a year or so, it might be best to get a CD. Huguenot Financial Planning Sturman says CDs are often a great place to set aside funds that won't be needed for a year or two. They'll garner more interest than a regular checking or savings account would, and unlike the stock market, you're assured that the money will be there when you need it. Consider inflation when opening a CD. Another consideration when placing your savings in any account is inflation. If possible, you always want to be sure your money's return is outpacing inflation. Otherwise, your money becomes less valuable over time. The inflation rate is 2.9% as of January 2025, much better than 2022's peak at 9.1%. And though rates are falling, the best CD rates are still beating inflation, making them worth considering by savers. Anytime you can lock in a CD at a return that is above the rate of inflation, you have to consider it, says Greg McBride, CFA, Bankrate's chief financial analyst. Just be sure to only commit to a CD where you are certain you don't need the money until maturity. To maximize CD interest earnings, savers would do best to select one that pays a significantly higher yield than the national average, which often means opening a CD with an online-only bank. Without the expense of maintaining branches, online banks may pass along the savings to customers in the form of higher rates. Relatively safe alternatives to CDs include low-risk mutual funds, as well as Treasury inflation-protected securities, or TIPS, which have an effective interest rate that moves up or down along with inflation.